Hi guys, welcome to Venture Matters TV. This series is initiated by KrAsia and 36kr Chuhai. We are two media brands under 36kr Global, and we cover innovation news in Chinese and in English about startups and innovation in Asia. So Venture Matters TV, VMTV in short, we launched it to provide insights about Asian investment patterns and cross-border opportunities. So hopefully through this series, we can get all the top VCs active in their own fields to share their opinion on global market trends. So I'm very excited to have with me today Paul Santos, Managing Partner at Wavemaker Partners. So if you guys don't know, Wavemaker is Southeast Asia's go-to seed stage VC for B2B and deep tech. You guys have over 100 investments in this space, right? So Paul himself was an entrepreneur who had co-founded 6 companies across multiple industries. So 3 of them, one recently, right? And he set up Wavemaker Partners in Southeast Asia in 2012, correct? Yeah, right. Thanks for joining us today, Paul.
Well, thanks for having me.
Okay, so I'm curious. So what made you start Wavemaker instead of continuing to run more businesses?
That's a good question. Entrepreneurship is quite tiring, as you can imagine. I see this as some sort of entrepreneurial journey too. So in some sense, it's a yes and no, meaning yes, I might have shifted, but no, it's still, I'm building a business, right? From scratch. So in some sense, I look at Wavemaker as an entrepreneurial opportunity. Now, I guess the big difference between this and other businesses I've built is in this business, I get to invest in many businesses. And, I find that fun, right? Like if I've had my 10,000 hours in something, it's around entrepreneurship. I've been across industries, mostly non-tech. And so the chance to work with, really interesting, engaging, founders who are trying to solve meaningful problems in a novel way, coming in very early and being part of that journey and being part of multiple journeys. I tell people, I hope I'm good at this so I can do this for a very long time.
Right.
So it was part interest, part timing, part luck, part opportunity happening. And, I said, this is something new I'd like to try. And so here I am.
Do you think it's more like, frustrating because now you cannot control the businesses that you are investing in, right? Last time you had the control. Is it different?
Yeah. And that's a good question also, right? Like, so if I take a sports analogy, there are players who become coaches, right? And some players are better players than coaches, and some coaches might have been better coaches than players, right? And this is, in all honesty, this is not like anything, but when I look at the portfolio that we've been able to put together, the kinds of founders that I've been able to work with, I'm probably somewhere in the middle, right? Like if I were a player, I might have been somewhere in the middle, right?
Only?
But I've gotten to a point where I don't mind not driving the car. In fact, I like being able to ride in many different cars. And it's because I've scratched my itch. And in some sense, I'm still driving my own little car anyway. And in some sense, I've also scratched my itch. And this is more just about, again, getting the chance to work with many different founders to build many kinds of businesses. So if you're like me and there are people who like to do just one thing, I kind of enjoy the variety.
Right. So back to the sports analogy that you were having, because I was having a few conversations with VCs recently. I think some of them we're discussing about whether, you have to be a player before you can be a coach. right? Do you think you can be a coach without being a player?
Yeah, you can. And in the same way, that's why I was saying sometimes the best players make lousy coaches, right? Because they want to do everything themselves, right? So I don't think there's a mold, right? Like if you look at me and when I was starting, you could argue that I had no right to play anyway, right? Like
Right.
I don't have a fancy degree from some international university. I studied in the Philippines. I thought it was a pretty good school, but not as known. I didn't work for, I mean, I worked for a good multinational P&G, but I didn't work for Google or Facebook or any of that, right? And you could argue that those are requirements.
Right.
So yeah, I think we're all shaped by our opportunities and what we did with them, our experiences, and if we apply ourselves in certain areas, we might do well. And so yeah, now everybody will have to play to their strengths, and maybe if you were an ex-player, maybe you have some strengths you can bring to the table that maybe people who weren't ex-players don't have, but at the same time, they probably have things that I don't have. So.
Right. Understand. So how did you, so when you started Wavemaker, right? How did you choose deep tech or B2B? Why?
It's really interesting. Again, because I looked at myself as a sort of not a tech person anyway. So it's all new to me.
Yeah.
Like, and so, you know, if I'll be honest, the first time I invested in a company, it was an e-commerce company called Luxola, which was eventually acquired by LVMH, by Sephora. Did I seriously know anything about e-commerce? Hell no. But how many people in the region did? Right? And so it's the same. My second investment was a B2B, was TradeGecko. Right? Did I know how to build software? No, but did I understand why their software might be useful for a business? Yeah. Can I put myself in the shoes of potential customers? Maybe. Right? And so for me, it was all the same. And then as I was doing it, I found that less people were interested in B2B and deep tech.
Right.
Right? The first deep tech investment I made was Structo, the 3D printing company. Right? And in some sense, you can be right to say, why the hell would you try to invest in a 3D printing company in Singapore?
Yeah.
Right?
Yeah.
And US students. But, you know, they're one of the global leaders now in 3D printing for the dental space. They found a way to compete now. Let's see what kind of returns we can get from them. But
right.
But they're proving that they created a product that solved the problem such that customers would pay.
What
globally.
About them convinced you at that point in time when you knew nothing and there was nothing else?
So, you know, so the Singapore government is smart, right? They'll put incentives in place for you to take a risk you might not normally take, right? So that helps, right?
Okay.
So you do that, right? And then you find that there are enough people who want to sort of take the risk together with you. Right? And so, you know, there's enough capital. But a lot of VCs also, but what if we're right? What if we're right about this bet? Could we make money, right? And the thing with this printer business is kind of like the 2D printer business where you have the materials, the resin, as going revenue. So I've tried different kinds of hardware stuff. I like things where there's a combination of hardware plus, right? So this is hardware plus software plus materials. There's a way to create competitive advantage that way. And, you know, coming out of NUS, they actually had a patent for the approach of how they were going to do 3D printing. If you allow me, I'll give you the very simple analogy. Do you remember what a dot matrix printer is?
A what?
Did you ever use a dot matrix printer, or were you always using laser printers?
Laser printers.
Oh my God. The dot matrix printers would go line by line. Sometimes you'll see them.
I've seen those, but I've not used
right?
it.
Yeah,
Yes.
okay. Yeah, so you've seen them, right? So you see
Yes.
how slow those things are, right? They go
Yeah.
line by line, right?
Yes. Mm.
That's what a typical 3D printer would do.
Yep.
It would print stuff layer by layer. That's why it took so long.
Yeah.
Okay. Now, what these guys did was they applied a simple concept of called masking.
Mm-hmm.
And basically, if you imagine a plane
Mm-hmm.
and you have resin that you can cook with light,
Yeah.
right? Now imagine masking is you expose or you cover the parts that you don't want cooked. You only expose the parts that you want cooked, right?
Mm.
And once you expose the light, that whole layer is cooked.
Yeah.
So versus the typical 3D printing, which is like line by line by line, these guys were going plane by plane by plane.
Understand.
And so as the print size grows, you can imagine the kind of competitive advantage. And when we found out that it was patentable because nobody else had figured this stuff out, then it's worth a bit, right?
Yep.
And so 3D printing was growing in popularity at the time. A lot of the consumer stuff were going. This was the B2B version. We took a swing. We got lucky. We discovered the dental industry. When we started, we didn't even know what industry.
Mm-hmm. Okay, so they pivoted after they were invested by you guys.
Well, I can't even say it was a pivot because we didn't have a direction.
Right.
We were throwing stuff on the wall and seeing what would stick.
Sticks. Right.
Yeah,
Okay.
and so we got lucky.
Mm. Mm. Okay, I want to route back to patents later, so hold that thought.
Sure.
For a start, right? When I was preparing for this conversation with you, I kept thinking of how do I define deep tech, right?
Yeah.
So if I ask someone in China or my team in China, deep tech would mean something that doesn't exist in China, right? Or something that's future. But if I ask someone, say in Singapore, or maybe my colleagues in Indonesia, probably when we say deep tech, it might be something that already exists in China or even the US, right? So I can't really. So what's your definition?
Where do you draw the line?
Yeah. What is deep tech? What is deep enough for you?
Right. So the first question I'd ask to that is, why does it matter?
Okay.
Right. It matters because there's enough science in there that's unique enough to create some sort of competitive advantage. Now, today's mobile phone is no longer deep tech, it's mainstream already. Right? But imagine 20 years ago, if I showed you a mobile phone, you'd say that's deep tech.
Yep.
Right? So the reason there will also be a curve is because as things become mainstream, they're less deep because they're commercialized, right? And so the idea is just, are you closer to the edge than to the mainstream? Do you have some sort of science or technology that makes it harder for people to copy you? Now, whether you turn that into a patent or you do it as a trade secret or a combination thereof, it boils down to sustainable competitive advantage. Why wouldn't you want to have that for your business? Now, because it's hard. Because it takes a while, right?
Yeah.
And if you allow me to go on one of my rants, I typically say it. Yeah, which is like, deep tech has to be patient capital.
Oh, I was going to ask you about patient capital. Like, how patient is our capital going to be?
Yeah, right. And my argument is, in reality, all VC is patient capital. You're just choosing what you want to be patient with. Okay, so let's take consumer, right? Whether it's site visits or downloads or engagement or GMV with no margin.
Yeah.
Right? People can get excited about that, especially if it's like fast growth, right? Up.
Yeah.
But you typically have to be patient with churn because consumers can be fickle. And sometimes your monetization isn't so good yet. So typically you have to be patient with bad unit economics, right? And what do you do when you multiply bad unit economics by spectacular growth? You get high absolute burn.
Yep.
You have to be patient with those three things. I find that I'm less patient with those things. Okay. Middle class boy from an emerging market. Like, I'm afraid of really high burn and no end in sight. I don't know how to do that. And I don't have a lot of money, right?
Okay, you don't? Okay.
No, not a lot. It's all relative, right? It's all relative.
Yes. Okay.
But when you're doing B2B, sure, you have to be patient with product development. It takes a little longer, especially if you're doing science, right? And it has to be 10 times better than what's out there, right? And if you add the other side, which is the sales process, right? When you're selling to companies, it can, and not all the time, sometimes you get lucky, but it can take a little longer than trying to convince a consumer to download, right?
Yep.
And so that time is what a lot of people are impatient with, because there's an uncertainty if you can ever build a product, or there's uncertainty if you can ever sell it, right? But you combine that, the reason it's difficult is change management is hard.
Yeah.
Because people are used to certain ways of doing things, and if you force them to change, if it's an incremental change, it's a hassle. People would rather not do it.
Yep.
But if it's 10 times better, there's a chance they'll do it. And so that's the reward for being patient. What you get is probably a low churn. You'll probably, because it's unique, you probably have a high margin. What makes it hard to get in is also what makes it hard to remove you.
Yeah, understand.
And so you get rewarded a different way. And so you just have to choose what you want to be patient with.
And so you can be patient with a long sales cycle because of the stickiness of it, and also potentially the higher margins, am I right?
Correct. And the better... Sorry, it's kind of dark. You want me to try to move this around? Or
sure.
Is that better? Maybe that's better.
Oh.
I'm moving around there.
Okay. Nice
Right.
view. Okay. Well, do you believe in the time machine concept? So let's say my assumption is that tech in the US or even China is, maybe a couple of years or even a decade ahead of Southeast Asia, right? So do you think that, what I can just adapt these technologies to Southeast Asia and make it into a viable business?
I think that's the normal playbook, right? I'm from the future. Let me tell you how it's done, right?
Yeah.
And people have proven that you can make money doing that, right? But since it's an obvious opportunity, like, tell me if you've heard this before, like, oh, I have this model in China, I just need to bring it to Asia. I might bring some Chinese entrepreneurs, I have some money, mix them locally, and then we'll fight, right?
I hear it a lot.
Well, yeah. There are probably 3 or 4 of you with the same idea, right? And so then it's who has the fundraising game down pat, who has the execution game down pat, and you hope that the assumptions that you had coming in will hold, because the context in Southeast Asia might be, or is often very different from China, right? So it's an easy story to tell. It's hard to do. On the flip side, Structo being an example, and I can give you a few others, nobody has the monopoly on innovation. Nobody. I mean, they could be in the lead, but there's no monopoly, right? And so the leap of faith you need to make, in the same way that you make a leap of faith coming from China to Southeast Asia that you can replicate it, the other way is the leap of faith you need to make is you can create something novel enough and world-class enough that if you go to other markets, you can win. And thankfully, we now have some of our companies showing that you can do that. Whereas when we started, it was an idea that, frankly, it was hard for me to convince people.
Right.
It's easier when you can point and say, look, it's possible. And
right.
I guess the other principle that is also I guess, less appreciated is it's not always the best technology that wins. It's the technology that gets most widely adopted.
Mm.
Right? And I will argue that Singapore is a great place to start because of the commitment to becoming this smart nation. You can see stuff getting adopted here, and made in Singapore is world class and is neutral enough that it can go anywhere. It's hard to do, but you know, there are fewer people who are interested in it.
Do you think there are fewer people who are interested is because of, you know, lesser research institutions or money? What is missing in Southeast Asia?
Nothing galvanizes like success.
Oh wow! Okay, great. Okay.
Right?
How then do we you know kind of boost Southeast Asia's ecosystem?
Just win, baby.
Okay, money, please.
Winning is a habit, right?
Yeah.
So we're starting with some wins. We have some small wins already. We sold 4 companies in the last 12 months and about 400 million in enterprise value. We made some money, right? Not yet the unicorns or decacorns or whatever you want to call them, but people are finding value, right? And so now there's a little more hope. And with VC, you don't have to be all right. You just have to be right sometimes.
Yep.
And if we can stick it a few times, then maybe people start to believe a little more and there's a little more support. But I feel like there is already some momentum. I feel like we do have companies that are going to, you know, take a good swing, and let's see if they land it.
Do you think these startups in Southeast Asia can compete with those from US or China?
Yeah, baby.
Okay.
I mean, if you take your time machine concept before, going back 15 years ago, 20 years ago, did anyone think you could create anything original out of China? If you go back in time, people then, would they have believed it? No. Now, hindsight is 2020. You can look back. Of course, we were able to innovate because we have this. You can explain it, right? But they, you know, how is it that somebody who can explain something so well going back could not have predicted it at that time? Right? And so you just have to either you buy into this ecosystem as having enough opportunity, enough talent, enough capital to make a go of it, or you don't. If you do, then it's a matter of time. We've drunk the Kool-Aid.
Yeah.
Mixed with some stuff, but we genuinely believe that there will be global champions coming out of Southeast Asia.
So what advice do you have for deep tech startups in Southeast Asia? How should they, you know, chart their growth given that, you know, firstly, corporates are sinking in a lot of money into innovation and research. Secondly, there's there's competition coming in from China, US, and even Israel, right? So how should Southeast Asia startups chart or plan their growth, or design their business models?
Yeah, good question, right?
Thank you.
That's the $1 billion question, right? Like if everybody knew the answer, it'd be so easy.
Yeah.
Okay, so when people ask me, okay, Paul, how deep is deep for you? And my answer is, I cannot fund science projects.
Okay.
In some more mature economies, they might have the capital to go for the science projects, right? And so when I say science projects, I mean, commercialization that's going to take, if you think waiting for B2B is long, and even further, right? I would prioritize those with a shorter path to commercialization. Why? Because investors here need more proof points. In more sophisticated, more well-capitalized markets, they'll be happy to take a swing because they've done it before, they see it, and they know the market. Here, as it's kind of like when you're starting a fire, right? Like you don't start the fire with the big logs. You start with the leaves, the twigs, etc. And so we need to be a little more frugal. We'll need to be a little more focused. But again, if you take Singapore, just the willingness of the government to collaborate, whether you use sort of the research institutes or universities or the government bodies or link corporations or even just the multinationals here that have set up R&D and innovation centers, even just engaging with them. And again, I can give specific examples. If you're able to land it, that's a 0 to 1 moment for a startup. If you think about what is one of the biggest risk factors a deep tech startup needs to overcome, it's winning the first marquee customer. Mm-hmm. That's sort of transformative for them. Because the moment you have one, then you go from to your 1 to N, it's more possible. And so I think here there's a 0 to 1 moment that's possible. For the rest of Southeast Asia, to your point, deep tech might be simple or simplified, right? Doing something with low power or low bandwidth, doing something that can survive the elements, might not sound too deep, but it creates a unique kind of a competitive advantage for the companies that do so, and they get into the market, and then you figure out your commercialization and scaling after that, right? And the context of Southeast Asia is different enough that if you set this up properly, you could come up with a business or a business model that you haven't seen elsewhere. Again, at some point, we can talk specifics. I don't want to make this sound like this all just theory. I can back it up with specific examples of companies. And let's see.
I only have 1 more minute with you, Paul, but I feel like I haven't asked enough questions yet.
No, we can. We can go on if you like. I don't mind. It's up to you.
Okay, I will. Okay. So by extension, right? Do you think that patents actually hinder innovation or growth in general?
Again, so that's why I'm not obsessed with it. Right? Like there are people who play that game. There are all of these patent trolls, right? Or all of these people who try to land grab patents and this and that, right? It's a component of the strategy, but it's not the only component.
Right.
Right? You can create other ways to have competitive advantage. Like I said, you can have trade secrets. You can have sort of your own network. You can have just your industry access. There are other ways to create competitive advantage. So I guess I don't obsess with it so much.
Right. And should the startups, care about that?
And again, it's hard to have a hard and fast rule. I would just say if you can get it and it's cost effective and it will really be a source of competitive advantage for you, knock yourself out. If by doing it, you're just giving your competition the recipe for your success, think twice.
Right. Fair. I wasn't planning to take a question from the floor, but I think Martin's question is interesting. So do you think startups in Southeast Asia should focus on solving problems on our doorsteps?
Yes.
No, but I don't think it's mutually exclusive, right? I can solve the problem and be a deep tech startup at the same time.
Correct. But see, this is why I like these enterprise focused stuff, right? The way I think about consumer plays is typically your goal is to create fresh, addictive delight.
Right.
Right?
Yeah.
And being cool for a long time is hard.
Really? You've been cool for a long time?
I've never been.
Okay.
Never in style, never out of style. So
no, your jokes are always in style.
Yeah, you can't do anything else. Try to make people laugh. So when you're solving a meaningful problem, you can measure the value, right? And if you're solving problems in our doorstep, chances are nobody else is solving them anyway. If you're solving problems at your doorstep, chances are your insight into it is probably better than somebody else's anyway. And your doorstep, you can look at it as, sure, it's geographic, but it can also be industry, And it can also be sort of somewhat technology driven, right? And then you see how to spread, right? And so you can solve something that's here, but it can go global. Or you can solve something that's here, and what the problem you're solving is just so valuable, and the way you can do it is just so capital efficient, you can create a boatload of money just here. So again, there are a lot of these rules or whatever you hear about. It's just investors trying to spin why their investments are really great. Ultimately, if you build a real business that creates value, then you will be valued over time. I mean, yesterday's hot startup, it's easy to, to laugh at them right now, but there was a time people were in awe of WeWork.
Yeah.
Right?
Yeah.
Oh, impressive valuation, blah, blah, blah. And everybody who pretends like they were never impressed or they saw this all along, I'd think twice, like, really? Maybe a few did. Not everybody. But it seems like everybody saw it. But anyway, that's an example, right?
Right.
Yeah, so I'll give you two examples. So maybe I'll end it with two examples, right? Because this is all theory, and I want to make things concrete. So I'll give you two examples. One is of how a deep tech startup over here can compete globally. We have a company called Silent 8. Founders are Polish. They had many markets to choose from. They chose Singapore. They were trying to do AI back in 2015. It's the first time I bet on AI. And people were saying, why the hell would you bet on an AI company in Singapore? I don't know. I like the guy. And because he was in Singapore, he was looking for use cases. Watson was all the rage at that time. It was the time when they were trying to bring up Watson. And so people were saying, oh, this thing, right? And he stumbled upon the innovation center of a global bank.
Okay.
And that global bank said, you know what, your technology is interesting. Have you ever thought about applying this for anti-money laundering? And we said, no. And he said, you should. And because he's in Singapore, in 3 weeks, he talks to 30 banking execs. And all of them say, it's a big problem, right? And you know how much the fines are for money laundering? Like there are hundreds of millions. I think the biggest one was BNP Paribas, like 9 billion. 9 billion as a fine. That's like a big problem, right? Anyway, so how would it work? You have all of these transactions coming into a system that would score the risk of the transaction. It would be plugged into multiple databases. It would score the risk. And if you're a bank, you think you're going to make that thing tight or you're going to make it loose. You're going to make it tight because you don't want to get fined a few hundred million or a billion, right? Now, when you make it tight, you create 99% plus false positives.
Yeah.
Right? And so how do you resolve all of that? You have humans plugged into these databases saying Paul couldn't have committed the murder in Singapore because he was in Hong Kong at the time. You have documentary evidence to prove why this transaction is clean. So they put the technology of Silent 8 there. And it's the first time in the world the machine was helping resolve, not just score, resolve the transactions, tell you why this is a clean transaction or not a good transaction, and here's why. And in 18 months, they got it to 80%. And the bank was so happy with it, they went live and they wanted to invest. And we said, you can invest as long as you tell other customers how good we are. You let them come and see your system. And he said, sure. And they came in. And the contract values are north of $1 million a year.
Nice.
From Singapore. You know how much money was put into that company before we scored that contract? $2 million. You couldn't have built that company in Silicon Valley. That would be the salary of how many people?
Right.
But that was a combination of Singapore and Poland. And now we have offices in New York, in Europe, here in Asia. And I think we have a shot. I think we have a shot if we close these next customers in our pipeline. There's a shot that this can become an industry standard.
Nice.
If this thing becomes an industry standard, you go to a bank, you say you want to protect against anti-money laundering, why take a risk? Look at all of these big banks that use this, and they'll vouch for it. So I didn't come into this game knowing we could do this. What I'm sharing with you is the observation I've had working with founders like this, and he's not alone. There are a few of them over here that are doing really compelling stuff.
And your second example?
If you wanted something more regional that sounds low tech but is deep tech because it's IoT, is e-fishery. Right? Not too many people know there are 30 million fish ponds in Indonesia alone. 3 million fish farmers, right? And not too many people know the number one cost of operating a fish farm is fish feed.
Right.
Did you know that? And you know what percent of operating cost fish feed is?
No.
80%.
Oh.
How is fish feed given to the fish? How do farmers give? Yeah.
Really?
Yeah.
Okay.
So now you create an IoT robot, whatever, using AI to feed the fish. It can sense when they're hungry and feed them. What's the impact? The impact is a typical harvest is, say, 3 months. If you feed too much, you waste money and you can increase the chance of disease.
Right.
If you feed too little, they grow slower. If they grow slower, you have fewer turns.
Yeah.
So they can cut it from 3 months to about 2 months and a week. You know what the impact on farmers' profit is on an annual basis?
No.
2x.
Oh.
Based on that alone, the opportunity is tremendous because we're in the double-digit millions in terms of revenue already, with just about, I'd say, roughly 30,000 feeders out there. And there's 3 million of them, right? Now, when I say something like that lends itself to new business models, they now have a fish feed marketplace.
Right.
They can now originate loans.
Right.
And now they can predict when the harvest will come. And so they have a fresh business that's able to sell. And they pay 20% more than what the middleman pays, and the customer ends up paying the same. When you put all of that together, it became a platform for a totally new business that nobody's seen, because, you know, the lead investor when we invested is a firm called Aquaspark, and they do nothing but aquaculture globally.
Okay.
They're not a tech VC, they're a fish investor. And they said they've never seen anything like this in the world. Fish farmer engineer from Bandung doesn't have the pedigree is solving a problem for himself and his fellow fish farmers, but is going to create a lot of value. I'm excited. I don't know what will happen in the end, but I'm quite excited. I think I can. It was doing 2 million in revenues and profitable when we invested.
Okay.
It's an oxymoron, right?
Yeah, I know.
Profitable tech startup, a profitable deep tech startup. But it took him 4 years to get there before we came in. So, so when I tell these stories, it's kind of like, I didn't expect you to have something like that with Poland or fish. Tech, fish tech. You just have to have an open mind.
Right. It's interesting because I think if we're talking about Southeast Asia, I mean, there's 10 countries in ASEAN, right? So all of us are at different kind of stages. And it's very interesting to see countries like Indonesia, Philippines even, coming up with their own solutions that work for their own countries, right? How big a role do you think the government plays in this? I know Indonesia government has been, becoming more open.
I might get shot.
Okay, let's change question. No, don't die.
No, so let's just say this. Some governments recognize it. I'll just talk about Singapore first. It's just, it's a crucial industry moving forward. Like when they say this is the world's first smart nation, I know it sounds all jargony and hype. But if you think where Singapore, if Singapore's third highest GDP per capita in the world already, where else is it going to go? It's already a global financial hub, right? Like, what's the next industry? It's got to be innovation, right? And so when the government recognizes that, it puts policies and incentives and all of these good things in place to make that happen. It has a role to play. Now, some people will say, oh, you make the startup soft, or, the best countries in the world don't need this, blah, blah, blah. Sure, it's easy to say, right? But you take the US, but they had a whole market to themselves, or China has a whole market to itself, right? You don't, if you set the spark, it goes. But Singapore needs a little help. Why? Because we have a small population. We need to be able to go global, right? And investors don't want to take the risk. So you help induce it, or, what's the most non-dilutive capital, the best kind of capital a startup can get? It's called revenue.
Yeah.
Especially in enterprise and tech. And so if you can make that happen, you can nurture these kinds of companies. Now, as you go around the region, different governments will be in different places when they think about this. They might have more basic problems to solve, and so it's less a priority for them.
Yeah.
But the rest of Southeast Asia are a gold mine of opportunity because there's so many problems to solve.
Yep.
In some places, the best thing they can do is just not get in the way. Let's not go there, but yeah.
Yep. Okay. Changing questions now. Well, someone was asking, Gabriel was asking, as a VC firm, is it more important to sell a higher valuation or make profitable portfolio businesses?
Okay, so the way VCs make money is exit, ultimately, right? So whichever path you need to get the best exit is the path you need to take. Now, it's again, we're in a world where everything has to be black and white sometimes, but it's really we actually live in a world of gray, right? Different shades of gray. And there will be some business models where you take the risk and you just keep burning the money for the growth and hope for a higher valuation and hopefully exit, right? But what we've seen is, if you look at 2019, if you look at the best performing tech stocks in 2019, it wasn't the consumer guys. It wasn't Uber and Lyft and all of those guys, right? They got hammered. Now, not to say that the enterprise guys were profitable or wildly profitable, but they could show they could be, or they were already. And they're the ones that were able to sustain their value. And so I wouldn't be obsessed either way, right? Like when you're pursuing a VC type of investment, scale at some point has to matter, right? Capital efficiency at some point will matter. Like my models for it were like Microsoft. Right? Microsoft was spitting out profits. Like if you look at Google, what was spent on Google to make it wildly profitable? If you think about the early days of eBay, they were profitable, right? It's not so much a goal as it could also be just a sign of their ability to create value. Profits can be, it's a sign of health. It's like food. Like you don't live your life for the food, but it's a sign that you can create your own food and so grow your business, right? So I wouldn't obsess either way. There's no black and white. It's the end in mind is, how can I get the most valuable exit from this business I'm building? And if it takes you one way or another, as the founder CEO, that's why they pay you the big bucks. You got to find that way.
Okay. I'm glad you say that, because I'm going to wrap up this session with one last question.
Sure.
So you yourself is a successful business person, right? And I would think that you have survived SARS, global financial crisis, and then now we are in, COVID. So
my first business I started in 1997. That was the Asian market crisis.
Great.
The Philippine peso went from 25 pesos to US dollar to 40 pesos to US dollar overnight.
Oh my gosh. Okay. What happened to that?
So we somehow found a way to survive. I built a cockroach business that we were able to sell to a Japanese firm called Dentsu.
Nice. Okay. So advice. What advice do you have for the aspiring or existing entrepreneurs to survive through COVID?
Oh my gosh.
Okay, story also can. Don't need advice. Story also can.
No. So I'm trying to think about sort of what would I have appreciated sort of when I was younger, right? And and there's just too many lessons. Okay, let me try not to do something technical. Let me try to focus on the human aspect, the human that I believe entrepreneurship is a human endeavor, right?
Yeah.
And one of the hardest things for a founder is you have to balance this overconfidence you have that you can build your dream. You have to balance that with reality.
Okay.
Right? On one hand, you have to be overconfident. You have to believe in your capability so much, even if the odds are against you, that yes, that sounds hard, but I can get there. On the other hand, as you're getting there, things may or may not go your way all the time, will probably not go your way all the time, and your confidence can get shaken, right? Yeah. And you can fall to one extreme. You can be just blinders on, I don't care, just go. Or you can be so affected that you overthink things and you don't do anything, right? And so what I would encourage founders to do is try to find your way of making what I'll call honest decision making.
Okay.
Right? What does that mean, right? Cliches are a cliche for a reason. I say this all the time, right? Like Winston Churchill was the one who said, never, never, never give up.
Yeah.
Right? And that's right sometimes.
Yeah.
And there's also this other cliche, know when to cut your losses.
Right.
And that's a cliche because it's also right sometimes. And the honest decision making you're going to need to learn to do is when you have to choose. Is it Churchill time? Don't give up? Or is it like cut your losses? And it doesn't have to be just about your business. It can be about an initiative you did and this and that. And that requires a certain level of honesty with what's really happening, right? Like there has to be a certain level of honesty with yourself about where your team is, where your finances are, where your competition is, what the market is, and not just delude yourself. And as you get better at this, hopefully you find ways to make better and better decisions over time. And if you make better and better decisions over time, you increase your luck, you increase your odds for success.
But that's hard, right? I mean, entrepreneurship is something that you need optimism to survive through, right? And then optimism is a fine line from delusion.
That's why I'm saying, don't ignore this. Don't ignore this reality. You can shut your eyes and say, no, I have to be optimistic all the time. But then you could lead yourself down the wrong path. You could be too realistic that you lose your belief and you become paralyzed with your analysis. And that could also squander the opportunity. But just sometimes it just begins with awareness, right? You just be aware that this is happening. You test your ability to make decisions. You test your ability to find people who can help you make sound decisions.
Thanks, Paul. I am so sorry we overran by 30 minutes.
Sorry to the audience, but no, that's fine.
I am disappointed that there weren't many jokes this time.
We're asking hard questions. It's hard to make people laugh when you have to think.
Okay, finally. Okay, thank you so much for taking time. Really appreciate it. I hope this has been informative for everyone who stayed back. We also have a KrAsia Debunks video with Paul, where we asked him fun/difficult questions so that you don't have to, such as, is there a drinking culture in VC? So stay tuned for that. Have a good evening, everyone, and see you guys in 2 weeks' time for the next episode. Bye, guys. Thanks.
Thanks for having me.